investing in shares and the taxation implications, if that's what you're concerned about, then hopefully this video will throw some light on the situation for you. There's two types of taxes you're going to be concerned about if you are investing in shares. One is capital gains tax and the other is dividend withholding tax. That's a tax on the dividends you receive. So capital gains, then obviously a capital gain is where you buy a share or shares and dispose of them at a profit, and you have incurred a gain because the sales proceeds or the sales price of your disposal exceeds the acquisition cost of the shares. In that situation, you have a capital gains tax to pay perhaps, and there's an annual exemption in Ireland of, I think it's €1,270 or thereabouts. Yeah, there's a personal exemption, annual exemption in Ireland of €1,270. You must pay capital gains on the shares. Obviously, if you don't dispose of the shares, if they appreciate in value but you hold on to the shares, in other words, like me, you're a medium to long-term investor, then you don't have to worry about capital gains for a while. But you will incur a gain, well then obviously you have to pay capital gains. You register with the Revenue Commissioners and you fill out a form yourself if you want to, or you can get your accountant to make a return, but you will have to do a return. In relation to disposals then, between the 1st of January and the 30th of November in any given year, you must pay the capital gains tax by the 15th of December of the same year. And disposals between the 1st of December and the 31st of December, you must pay by 31st of January of the next year. So that's essentially the situation in relation to capital gains tax. You pay it online with Revenue, or you must register with Revenue. You can file the return by filling out a form or completing it online, and losses then you can offset losses against your gains in any given year, but you can't carry forward losses. You must use the losses that you've incurred in respect of share disposals in the same year against gains incurred or made, as it were, with shares in any given year. In relation to calculating the gains on the shares, it's a very straightforward calculation if you buy a share and hold it for a period of time. Where it gets difficult and potentially complex is where you buy a number of different shares at different times and you buy shares of a different class. Then the calculation of the gains on your various shares, if you make various disposals, can be complex enough. So you probably will need to get assistance from an accountant unless you're fairly good yourself in terms of maths and calculations and accounts and so on. The other type of tax you need to be concerned about with shares investment and so forth would be dividend withholding tax. So obviously if you hold shares in any company and they pay a dividend once or twice a year, then you've got dividend income. Now, in relation to Irish shares, the dividend that you're going to receive is going to be a net dividend, because the company that's making the dividend payment has an obligation to withhold tax. So say Ryanair is making a dividend payment, then the payment of the dividend to you is going to be a net payment, and they will have withheld the dividend withholding tax, and they will be obliged to remit that and return to the Revenue Commissioners. It gets a bit more complicated when you are receiving dividends from different jurisdictions. For example, United Kingdom or United States. There is double taxation treaties with various countries. Ireland would have a taxation treaty or treaties with different countries, and this is obviously to ensure that a taxpayer is not paying tax twice on the same income. So there will be a tax treaty, and how it is going to impact on what you receive and the amount of tax you pay will depend on which country the dividend is coming from. For example, United States have a 20% or 30% withholding tax if you fill out a particular form. So coming from the United States, it's or it's 20% or 30%, depending on whether you fill out a form or not. That's the sort of withholding tax you're looking at there. From various other jurisdictions, there's different rates of withholding tax. Generally, you'll be receiving your dividend net. In other words, the tax will have been withheld by the particular company that is paying the dividend. However, in relation to UK dividends, the dividends are paid to you gross. So you will be obliged to make a return and account for those dividends, that dividend income, to the Revenue Commissioners. Now, if you have a platform or you're buying your shares and selling your shares, investing on a platform like Davy Select or the Gyro, you need to check with them what exactly is the situation. I know, for example, because of accounts with both of those companies, that Davies, and I've been making inquiries about this, have a tax return form which will give you a record once a year of the tax situation in respect of your dividends and how much tax you've paid and whether the dividends paid to you have been subject to withholding tax or not. So that's what comes from Davy Select. In relation to the Gyro, then, the Gyro generally will receive the dividends net and the withholding tax will have been paid already. So that's something though that you need to check. So you need to check with whoever you're investing with, be it Davy, be it the Gyro, or be it some other provider of such a service. And dividend withholding tax is one of the taxes you're going to be concerned with. Capital gains tax is the other. You may need assistance, you may not. But if you buy shares and hold them, then all you have to be worried about really would be the dividend tax. And obviously, if the payments are being made to you net, well, then your tax in respect of that dividend income is being paid and so forth. And it's up to the company, the payer of the dividend, to actually make a return to the Revenue Commissioners. Hope you find this video useful. If you do, I'd appreciate if you gave it the thumbs up down below. And if you are interested in subscribing to the channel, I make videos about Irish law and Irish business, and I try to explain Irish law and aspects of business in plain language. If you are interested in subscribing, simply hit the subscribe button down below, hit the bell icon, and you'll be notified every time I bring out a new video. Thanks for watching and thanks for your attention.